If you're someone that's watching this video and you're in the real estate industry, you're likely having the exact same experience I am at this time of year, and especially going into 2023. And that specifically is that my phone is ringing again. My phone is ringing again, more specifically with investors looking to take advantage of the current marketplace. Why? Why is this happening? Why are mortgage brokers reporting the same thing, that they're getting lots of phone calls from would-be home investors? I'm going to answer just the exact reasons why that is happening in today's video. And if you're someone looking to either buy or maybe invest in a home, you definitely want to pay attention to this one, because there's some interesting thing on here that I think you're going to want to consider. What's good, everybody? It's Darren German from the German Group, where we know you've only got one chance to either buy or sell your next home. So we're here to help you get it right. There's a subscribe button right there, and you're going to hit it because you don't want to miss out on any of the good videos we're releasing on a regular basis that help you either become a better home buyer, a better home seller, or generally a better home owner. So subscribe, all right? You're also going to want to hang around to the end of this video, because if you are someone looking to buy a home, I'm going to let you know how to take advantage of some substantial savings programs that are available right now and how you can find them all in one convenient place. So hang around. For those of you that know who Dave Ramsey is, and maybe those of you that don't, Dave Ramsey is a big-time financial guru, very well followed not only on YouTube, on podcasts, but also kind of rubs shoulders with some of the big names in self-help industry, mortgage, real estate, everything like that. So if you don't know who Dave Ramsey is, you should check him out. But here's the reason why I'm bringing him up, and this is why I think you want to pay attention in this video. Lots of people are worried about what the interest rates are doing right now, and there's a lot of concern that if you were to buy a property right now, you're going to succumb to the interest rates that are of today, and they're obviously a lot higher than they were previously. Here's the interesting thing and the interesting thought that Dave had, which I think is absolutely brilliant. Back when the market was absolutely taking off and prices were really taking off and it was really quite busy out there, people were really buying any home that was available, and really that just was happening because they wanted to take advantage of the mortgage rates at the time and also the gains in prices. But the mortgage rates were a huge driver. So they were getting a home that they maybe didn't love, but a mortgage rate they absolutely did love. Fast forward to today, it's completely the opposite. It's a mortgage rate that doesn't really make anybody feel good. It's certainly higher than it has been over the past 10 years, but the difference is now if you're a home buyer specifically, you get to choose the home that you love because there's less people out there buying homes right now. His advice was to get the home now and start paying your mortgage, start paying down that principal. And if and when those rates do come down, refinance. Financing is really essentially just renegotiating your mortgage with the bank. And if the rates were to come down substantially, refinance to take advantage of those lower rates. But the secret to his comment is to get in the market and start paying that mortgage off. Look, the maximum mortgage, if you have less than 20% down, is 25 years. So you could be, let's say, 24 years left or 23 years left on that mortgage rather than giving all your money away for rent. So this comment that Dave made got me thinking, and it got me thinking a lot about why the phone keeps ringing with investor clients starting to become interested in the market again. And when people buy and sell real estate, they're very interesting because they do it in the group or the herd kind of mentality, which means if everybody's out there buying houses, they think it's a good time to sell and a good time to buy. If the prices come down similar to the market that we've been experiencing, they think it's a terrible time to sell and a terrible time to buy. This is where it gets interesting though. Buying a house and selling a house are competing interests. They compete against each other. It cannot be a bad time to be a home seller and be a bad time to be a home buyer. Think about going to a store to buy, let's say, a sweater, and you see a beautiful sweater you're super interested in and it's full price. Well, it's a good time to sell that sweater for the store. That's why they're asking full price for it. But you as the buyer, well, you don't necessarily agree with that, so maybe you choose not to buy it. You visit again the next weekend and you see that exact same sweater, but now it's marked down by 25%. Well, the store's trying to get rid of it. It's not the best time for them to sell it, but they're trying to offload it off their rack, and you're going to take advantage of that because now you're getting it at a discount. This is literally no different than what's happening in real estate right now. And instead of following the herd mentality where buying homes when prices are going more and more expensive, investors recognize this and they know that the market is towards the bottom of where the prices are going to be. I don't know if they're going to go down further. They might not. We don't know that. But what we do know is they are definitely on sale compared to where they were previously. And the interesting thing is home prices may have already done what they're going to do. Home sales across the country were up in October for the first time since they started declining back in the spring. We're also seeing some markets and some different types of products increasing in price. So sales have stopped their landslide down to the environment where it felt like nothing was selling. That is definitely not the case anymore. Prices, like I said, have also flatlined as well. An example of this would be like White Rock condos, where there was no price change last month, or townhomes, which did experience a price change. They did go down a little bit in White Rock, but barely anything. So has it done what it's going to do? This also reminds me of a quote from Warren Buffett. And when stuff goes on sale, like real estate, why are these investors paying attention? Well, the Warren Buffett quote, which you've probably heard before, is be fearful when others are greedy and be greedy when others are fearful. If you strip that quote down, what he's really saying here is don't do what everybody else does, because then you're going to have what everybody else has. I wouldn't mind having what Warren Buffett has, and you probably wouldn't either. So he's a pretty smart guy we should probably pay attention to. The last thing that I think is really interesting, and this is probably the number one driver of why investors are starting to pick up the phones again, is the rents are absolutely sky high right now. What would you guess is the average increase in price year over year to rent an apartment in South Surrey or White Rock, as an example? Are you thinking about it? Keep thinking, keep thinking, keep thinking. A one-bedroom apartment in White Rock right now, according to the website Zumper, is now going for $2,300 a month. $2,300 a month, which is up 64% year over year. 64% is a lot of money. How about a one bedroom in Surrey though, as an example? Well, a one bedroom apartment in Surrey is now going for $1,800 per month, which is up 13% year over year. Now, regardless of what the mortgage rates are doing, mortgage rates are only up under 4% right now. And these rental prices are up well over 10%. I'm not a mathematician, and you might not be either, but I know going up 14% and having mortgages go up by 4%, there's still a big profit margin there, right? At the end of the day, it's all about cash flow for investors, and these rental prices are incredible. In fact, a two-bedroom in Surrey is up to $2,350 per month. This is up 18% year over year. A three-bedroom in Surrey is up 22%. This is an average of $3,050 to rent a three-bedroom unit in the city of Surrey. This is nuts. So there you go. That's my impression of the reason that many investors are out there picking up the phones and starting to pay attention to what's available and what's happening in the real estate market right now. As always, I'm curious what you think. Where do you think the market is headed? If you were considering investing in a property, would this be the time that you would think that you would do it? Leave me a comment below and let me know what your thoughts are on this video and the information I provided. And while you're down there, don't forget to check out in the description the access that I promised at the start of this video to the substantial savings programs available to you if you're looking at either investing or buying a home just for your personal use. This is basically free money from the government, and you don't have to search all over the web to find it. It's all together in one central spot where you can figure out how much money you're going to be able to save or get back when you buy. Also, while you're down there, if you're looking at buying or selling in our local marketplace that we serve of White Rock or South Surrey or Surrey, BC, be sure to book a time in our calendar. And if you have questions about the process, the market, or anything to do with it generally, we're certainly happy to give you the information to put you in the best position to do either your buy or your sell. Guys, I'm Darren German with the German Group. You've only got one chance to buy or sell your next home, so we're here to help you get it right. Thanks for watching, and we'll look forward to seeing you on the next video. Cheers.